Hello everyone, this is Josue Lopez, the broker at Grow Mortgages. I also sit on the Los Angeles County Assessment Appeals Board, which deals with the assessed value of property, which ultimately is used to determine your property taxes. Lately I've been hearing from clients, I want to buy an investment property, but everything's so darn expensive in Los Angeles. How do I find a good deal? My answer to you, nowadays, you got to create a good deal. How's that, you say? Well, ADUs, accessory dwelling units. So listen to this. In South LA, not including the city of Los Angeles, the average cost per unit, per door on a 2, 3, 4 unit property is $371,000. That's per door, per unit. And obviously, the numbers have to make sense to deal with the headache of a project of this degree, having to deal with architects, city planning, contractors, standing in line at Home Depot. So let me give you a few more numbers. The average cost to build a permitted ADU is $120,000, give or take $40,000. So let me give you some more numbers. I'm gonna venture out and say that the average rent on an ADU in the South LA area is about $1,500 per month. And if you can rent this ADU out for $1,500, then you'll pay off the $120,000 cost in about 80 months. That's a little bit over 6.5 years. And you may ask, what about the increase in property taxes? Well, in California, we use a blended tax assessment, which means that your current property, the current structure, won't be reassessed. And the new structure, the new construction, it'll be assessed at current market value. Therefore, after the construction of the new ADU, your property taxes will now be your current tax bill plus the taxes on the fair market value of the new ADU. And there's some pretty good benefits to this too. Number one, passive income. Number two, added appreciation based on the newly added square footage. Number three, leverage on that appreciation. Number four, depreciation for 27.5 years. And number five, with that new passive income, you can pay off your mortgage a lot faster. To me, that makes a whole lot of sense. Now, if you don't have $120,000 laying around, you do have some options. Number one, you could cash out with a refinance. Number two, you can attach a second mortgage, a home equity line of credit to finance the project. And number three, there's a program out there that'll help you with some of the soft costs, which is like the plan for the plans and the permits. So, how do you find a good investment deal? You create one. Build an ADU. If you need further elaboration on the what's and how's of an ADU, some financing options, the value of property, rental market values, or property tax assessments, then please reach out to me or send me a message. Again, this is Josue Lopez, the broker at Grow Mortgages, signing off.